Welcome to Walker's Market Weekly. I'm RK Walker, coming to you from my home while the New York Stock Exchange's floor is temporarily closed, bringing you a review of this week's stock market. Over the weekend, President Trump said that national social distancing guidelines would be extended to April 30th. And on Monday, the pending home sales index for February rose 2.5% to 111.5, the last read before effects of the coronavirus take hold. A recent analysis by St. Louis Federal Reserve economists estimated that the total employment reduction would total 47 million, equating to a 32.1% unemployment rate. However, optimism took hold when Johnson & Johnson said it had a lead candidate for a coronavirus vaccine and that human testing will begin in September. In addition, New York Governor Cuomo said that the rise in confirmed cases is slowing and the hospital discharge rate is rising. The government's extension of social distancing cratered demand for oil, with West Texas Intermediate crude falling 5.4% to $20.36 a barrel. The Dow Industrials rose 690 points and was up 20% from its sell-off low 1 week prior. On Tuesday, consumer confidence for March fell 12.6 points to 120. However, the drop wasn't as steep as expectations. Coronavirus cases in New York surged along with fatalities. The Dow Industrials closed 410 points lower and finished out the first quarter with a loss of 23.2%, its worst quarter since 1987, while the S&P 500 lost 20%, its worst quarter since 2008. West Texas Intermediate crude fell over 66% in the first quarter, its worst quarterly performance on record. At the end of the day, 10-year treasuries fell 5 basis points to 0.68%, and West Texas Intermediate crude rose almost 1% to $20.28 a barrel. After markets closed Tuesday, President Trump gave a press conference and said it was going to be a very, very painful 2 weeks, and White House officials up projected coronavirus deaths to between 100,000 and 240,000. On Wednesday, the ADP employment report for March came out, estimating a loss of 27,000 jobs, and the PMI manufacturing index for March fell into contraction territory at 48.5. The ISM manufacturing index for March also fell into contraction at 49.1. Construction spending for February fell 1.3%, and the EIA petroleum status report for the week ending March 27th showed crude oil inventory surging 13.8 million barrels. Markets opened sharply lower and remained down all day, with the Dow Industrials closing 973 points lower. On Thursday, motor vehicle sales for March fell 5.3 million units to 11.4 million. Factory orders for February remain unchanged. However, jobless claims was the big news, and for the week ending March 28th, increased to 6.6 million initial claims, double the prior week's already monumental number. Markets opened lower on the dismal news. However, President Trump tweeted that after talking to the Crown Prince of Saudi Arabia, he thinks Russia and Saudi Arabia will cut oil production by 10 million barrels. Markets then took off, ending the day with the Dow Industrials 469 points higher. The energy sector was a big winner, with West Texas Intermediate crude surging 22% to $24.72 a barrel, and gold also rose 3.1% to $1,640 an ounce. On Friday, non-farm payrolls for March dropped 701,000, much steeper than expected, and the unemployment rate spiked to 4.4%, up from the prior month's 3.5%. The ISM non-manufacturing index for February fell 4.8 points to 52.5, a smaller decline than expected. The government opened enrollment for businesses to apply for relief loans. However, many banks weren't ready to accept applications. At the open, markets were modestly down on the news, and then selling continued getting worse during volatile trading. This is Walker's Market Weekly. I'm RK Walker, and I'll see you again next week.